Did you know that this generation will change as a result of the impending Tesla stock fall, according to Chamath Palihapitiya? It is commonly known that Tesla leads the electric vehicle market, and consumers are expecting the business to continue to innovate. Keep an eye out and stay tuned to learn what Palihapitiya meant. It is innovation that propels global progress, things that are new, innovative, or evolve from what people are used to indicate improvement and change. Accordingly, Tesla has a reputation for introducing several inventions in a variety of fields and domains. You'll discover today why this generation will be altered by the impending Tesla stock fall, according to Chamath Palihapitiya. The thing that you have to do before you talk about what is happening now, I think is probably useful to go back and start at the end of the great financial crisis, states Chamath Palihapitiya. Originally from Sri Lanka, Chamath Palihapitiya is a Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital. From 2007 to 2011, he had a senior executive position at Facebook. He is the CEO and creator of Social Capital, according to CNBC, whose goal is to improve society by finding solutions to the most difficult issues facing the planet. Palihapitiya is number 2378 on Forbes' list of billionaires 2021 with an estimated net worth of over $1.2 billion as of April 2021. Social Capital was established to make investments in businesses and industries including health, finance, and education that are overlooked by traditional venture capitalists. Since then, the business has grown to include investments in internet startups including Slack, Tesla, and Amazon. Palihapitiya, a well-known Tesla bull, predicted that the company will double or possibly triple in value in the next years due to its bright future. Additionally, he stated that Tesla is a clean energy company that may surpass the fossil fuel sector, which will eventually cause Tesla stock to outperform and present a far greater chance to reach $10,000. Even still, he can't deny that the economy isn't doing well right now, even though he supports Tesla. According to Palihapitiya, the thing that you have to do before you talk about what is happening now, I think it's probably useful to go back and start at the end of the great financial crisis. The reason for this is that many individuals were perplexed about the actions of the US government and certain European governments after the great financial crisis. The time between mid-2007 and early 2009, when global financial markets and banking systems were under tremendous strain, is known as the Global Financial Crisis, or GFC. He claimed that at the time, there was a serious possibility of a financial meltdown, prompting action from the United States and the Fed, which began purchasing toxic assets using its balance sheet. The United States of America's central banking system, known as the Federal Reserve System, or Fed, was established on December 23, 1913, when the Federal Reserve Act was passed. This was in response to a number of financial panics that prompted the need for central bank control over the monetary system in order to prevent future financial crises. Accordingly, numerous governments adopted it, and later on, a group of individuals came up with the modern monetary theory, which essentially says, hey, you can keep printing money and introducing it into the economy to smooth things out and to drive long-term growth. Modern monetary theory, also known as modern money theory, MMT, is a heterodox macroeconomic theory that, by definition, views the currency as a public monopoly and views unemployment as proof that the owner of the currency is unduly restricting the availability of the financial assets required to meet savings goals and pay taxes. According to this idea, concerns over growing debt should not be used as a reason to limit government spending. It appears that a number of public servants were duped by it. The opportunity cost and distributional effects of the central bank's monetization of deficits, such as how it affects asset prices, are not addressed by MMT, though, and they can have an impact on the economy's supply and demand sides as well as the inflation constraint before full employment is achieved. According to Palihapitiya, fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about $30 to $35 trillion of money into the economy that should have never been there. Therefore, it's important to keep in mind that although we've been discussing recession and inflation for the past 6 or 8 months, we haven't always been hiding the reality of supply and demand. In actuality, we have been doing it since 2008. Simply put, it has been accumulating throughout the system. Do you believe that buying Tesla stock now is worthwhile? Post your ideas in the space provided for comments below. Palihapitiya contends that in order to have a true economic balance, individuals must come to the realization that all of that money must ultimately be destroyed. In the absence of the government misappropriating funds, trying to prop up things that shouldn't be propped up, buying votes, or engaging in any of the other grifts these people have committed over the past 15 years, he said, what is true supply and true demand must be undone. That is the background, he said. According to Palihapitiya, the removal of $30 trillion from the global economy would equate to an increase in the world GDP of $85 trillion. That's almost equivalent to half of the global GDP for a full year. Instead of reintroducing new money, he said, it will require around 3 years of the methodical, steady draining off of money. He stated that regardless of whether or not we are experiencing a recession, it appears that we are just starting a lengthy and drawn-out process. That's just the nature of the current bear market. Palihapitiya predicts that the Consumer Price Index CPI will likely remain extremely low over the next 3 to 5 months. It was mentioned by him that a few parts have completely vanished. Rent is the first and most likely the largest. Rent is due 3 months in advance. He continued, we're going to reintroduce what the true owner's equivalent rent is into CPI so that we can already forecast that CPI going up with oil worth $105 a barrel. And Russia is basically trying to break the Bank of Europe by now messing with their nat gas supplies. In addition, the German Minister of Energy stated that in the event that it occurs, it might spread like Lehman Brothers did. In terms of energy, Lehman Brothers Holdings, Inc. was a multinational financial services company that was established in 1847 and declared bankruptcy in 2008. Lehman was the 4th biggest investment bank in the U.S., employing over 25,000 people globally. According to Palihapitiya, if all of these things are allowed to play out, the result will be rampant runaway costs that are impossible to rein in without meaningful policy changes from the government, particularly when it comes to the war between Russia and Ukraine and how the government plans to engage, collaborate, or engage in combat with China. All of these issues must inevitably be resolved. Prices are going to keep rising in the absence of such. Having stated that, individuals begin to. I wonder how the Fed will handle this. Palihapitiya thinks that because there is so much pressure on the Fed to act, they will overcorrect. Palihapitiya asserts, I believe that all roads lead to lower equity prices. Palihapitiya believes differently despite Wall Street's announcement of record earnings this year and their prediction that earnings will rise much further next year. How do you see earnings going up into these prints like this when you are unable to pass through increases of 80 to 90% in energy and COGS and other costs, he said? Because fewer people will have jobs and be able to purchase goods, you will need to sell fewer goods. Palihapitiya believes that Wall Street is mistaken about that account, and that in contrast to what Wall Street says, earnings will decline this year and undoubtedly the following year. He stated, I think what probably happens is the entire world of equities needs to get repriced at a lower price. Even said, it does not appear that a recession will have a major negative impact on Tesla stock prices. Compared to other automakers, Tesla's business is actually predicted to hold up far better. In the past, Tesla has projected delivery growth of more than 50% over a number of years. And this year, it may reach 60% growth, suggesting that demand growth should continue even in the case of a slump. Furthermore, financial data suggests that this recession won't be particularly severe, with bank capitalization staying strong and family savings having increased since the pandemic. Check out our other videos on our channel for more information about Tesla stocks.